So let's follow up. Last week, I talked about this dollar recovery into the Fed, that it was going to be a short. That did work from the Fed, also had people long the yen going into this. So here we are midweek, shortened week, and I talked about a couple of different scenarios. I thought there was a possibility that although this high is still intact, that we could still have a pullback, which is what happened, and then potentially a C wave back towards this 99.5, 100 level. That does still look to be in play, that perhaps before we take out this 97 level, we head down a little bit in the next couple days and then get one more recovery. Regardless of that, I'm viewing dollar strength as being a selling opportunity and thinking the euro could pull back to the 107.60, 107 level, and that would be a buy. Still looking for 112, 112.50 in the euro. Give me a Y if you're with me. I would like to follow up with, turned out to be very prescient. I talked about the crude oil market, that the whole world was bearish. We've had a very nice spike to the upside in crude. Let's take a quick look at that. From Monday's low, that turned out to be the low. I think that there's potential now for the market to make a run back towards $40. 42 was the number I talked about. So here's your move. We'll see if we have follow through. Crude up quite a bit. Talked about this being a third drive to a bottom, that it could set up a pullback in USD CAD, which is happening, but perhaps some dollar strength along with the S&Ps will give us another opportunity. So here we were. We had to roll over, so we have this nice rally in crude. I'm looking for 40, 41, 42. Could they take it down one more time with dollar strength? That's possible, but like I said, it was a very crowded trade in the crude oil market. We've had a big break, 51.17. So even 38 back is going to give us a rally back to 40 to 42, which should impede any upward progress in USD CAD if it rallies because of dollar strength. This is even setting up the opportunity that a correction is overdue in Canada. Canada is becoming as crowded to the upside as crude was to the downside. Taking a quick look at the gold market here, and said that Aussie had some higher levels left. Let's go with gold. Gold giving up a bit today. Aussie looking like that rally may have run its course. Gold looks like it wants to flush one more time, and it ties in with the possibility that the dollar still has a recovery again on a C wave, as I just described a few minutes ago. Back up towards that 99.5, take that out and head towards possibly par, and that should take the gold down going into the new year. This is everything I talked about here. I got right. This surprised me. After the close we had Friday, in my view on the dollar, I was pretty surprised to see this recovery Monday, Tuesday, Wednesday. It's looking pretty bullish here. But again, the oil shares are going to help it. So are we on our way to new highs in the S&Ps? It's possible. It's also possible we could have one more of these. Failing rally, failing rally, failing rally. One more down towards this 1930 level. Perhaps this final push up in the dollar failing rally will equate to a failing rally here as well in the S&Ps. And we should get a lift and a selling opportunity coming up here in the yen, because of strength that we've had in equities. Treasuries have been under some pressure with yields starting to head back up, which normally generates some upside in US dollar yen. So we'll see what happens, especially if we start heading back to the downside. I'm still negative US dollar yen. We were long from a week ago last Monday into the Fed, and now I'm looking for rallies to sell into. Give me a Y if you're with me on my analysis of the outside markets. I correlate the Canada to crude, called the crude bear market pop, which is manifesting in spades today. Canada's come off a bit. not as much as I thought it should have with this type of rally that we've had in the crude, up about 4 or 5% right now. And the Aussie with the gold looks heavy. Looks like we're going to wash to new lows. So I still think there's going to be a pullback in Aussie. That 70.50 level is kind of a line in the sand for a possible bottom, and we'll get to that in a minute. Also, I talked about 74 in the euro pound and liked it down there at the 70 level. I've been telling people to start booking profits. I think that we finally have at least an interim high in euro pound. It looks negative to me for perhaps this pullback back down towards 71.5 before it attempts another rally. Give me a Y if you're with me on the outside markets and the correlated instruments, the pairs. Okay. So with that, let's move on to our individual instruments. We always start off with Euro USD. So, talked about that there could be some downside in the euro, and we've come off since Monday, right, from up here. And this still could be some type of A, B, C that could take us back down towards this 107.60 level right around here. Maybe just a shade under these 108 lows to shake out some of the euro bulls. And then I still have confidence that even after this pullback, if we get it down to 107.60 sometime in the next several days, that our ultimate target is up towards 112.5. So I view dollar strength, just like I was describing on the Dixie contract, as a selling opportunity. So because of that, I view any euro weakness back down towards 107.5, and most likely it's a fib retracement of this bottom that I called. So we were right about this huge explosion, and to me it looks like we're marking off, working the overbought condition off more in time than in price. And in fact, let's plug in a couple of fibs off this recent rally to the upside, peaking here. Halfway back is right at that 108 level, so 61.8 back coming in right around this line, 107.5. So that would be a buy zone for me. And then if you have a quality, this was about a 500 plus pip rally. So from the 107.5, 107.30, 40 level, tack on 5, and it gives you what? The target, 112.60. So look to buy breaks, possibly into next week around this 107.60 level in euro. Give me a Y if you're with me. So now that the euro pound is correcting, we should have some type of turn in the pound. On the 4 hour, we have a little divergence. We really don't yet on the 1 hour. So perhaps we're looking at drive 1 here. Confirm low. Drive 2 here. And just eyeballing where a third drive to a bottom would come in sometime next week would be about 760. So 100 lower, and because the euro pound is in a corrective stage or a pullback stage, I'm not against probing the pound should it offer a buying opportunity at the 7.5 level, risking 100 pips, because we've got a pretty big break from this level up here. So why not, after we bottom here, get some type of retrace, at least back to 149.80, 150. So here's a look. Inside day diverging here on the daily, and perhaps we rally back to the 150 big round number once this dollar rally fails and we head back down again. Give me a Y if you're with me on pound dollar. Okay. Just want to reinforce to everyone, the guppy is still looking negative. Thought we had a little third drive here, but if I'm right and we get any kind of rally in the pound coming up here, rallies back to 182, are shorting opportunities in my view. I still think we have a lot of downside left in this massive either head and shoulders top formation or descending triangle. We're under the breakdown right here. So any rallies in the guppy, maybe pound rallies back to 49.80 to 150, and we get an opportunity to short up around 182, 182 and a half in the guppy, because I still see projected downside eventually taking us down to 170. I've been talking about the 180 targets for a while. We're here. So if you really want to get bearish, you just measure this whole formation, which is 1,500 pips, can give you like a 165 possible target. I have some intersecting lines there. The 170 looks doable. So sell rallies in the guppy up around 182. Euro yen, I wasn't as negative as the guppy, and looks like there might be an opportunity. I can't get negative this until we start seeing 112.50 in the euro yen, and I think that that's going to happen in 2016. So I'm going to favor longs in euro yen. Looks like a nice fib retracement, so we get some type of retest at 131. Perhaps we get something like this from here, especially if we're going to see 112 in the euro yen. That could possibly take us back towards 133 again. There's your 4 hour and your daily. So to me, it looks like we're going to put in a higher low here and perhaps recover back towards 136 after the dollar rally completes itself. Give me a Y if you're with me. So this was a very big trade from a week ago before the Fed. I pointed out this falling wedge here in the end, said there'd be a stop hunt over 22.5, and we got up to 22.80, and then we had the BOJ spike. To me, I still have a negative bias in here, and I'd look to be selling rallies in US dollar yen. Ideally back to 22 would be nice, and then the next time down through these levels at 120, 121, I think we could be looking for 117, 118, and eventually I'm looking for a full-blown retest and take out of the flash crash low that we had here in August. So I'm viewing any strength with the dollar, if the dollar bounces again while the euro's pulling back towards 107.5 or so, that the yen would be a nice little fade on strength. Let's just look at a couple of fibs here. Don't know whether or not I should take that BOJ spike into account, but I will. So let's see some levels and look for some confluence here between the high that we had on the BOJ and recent lows here. So that's going to give me some confluence up here at the 38% and 50%, ideally 22.15, 22.30. And I think eventually we're going to be testing this 118 level, which ties in with what I'm looking for in the dollar. I still think the dollar could correct back under the 97 lows that we had recently. So I view any strength that we get here in US dollar yen to be a shorting opportunity. 122 would be kind of an ideal zone for me. Don't think that we'll have enough juice to get up towards this 22.80 level. So some type of failing rally in here in US dollar yen. Give me a Y if you're with me. So here was my look in euro yen, set to take profits up around 74. I have this third drive line that we got through. Pretty strong. It's not classic. So it's not a classic short for me. But I still think that there's a chance, even if we try and probe these highs again, maybe trade towards 75.5, that a good portion of this move up towards 74, that was the projected line that I had all the way back there based upon a weekly neckline. So have this neckline drawn when we called the short side here, said we could get back there. So I think there could be a pretty good retrace from the 70 level, 74, 61.8 to 71.5 level would be kind of an attractive area for me to probe the long side of euro pound if it gets back down here, 71.50. And during this phase, the pound should have relative strength over euro. Give me a Y if you're with me. Okay. So let's go over to our commodity currencies. So gold looking pretty heavy, which tells me that I should be cautious now about the long side of Aussie. And I had some 3 drive lines down here that we never got to. This breakout level. So to me, I think there is potential on a dollar rally for the Aussie to pull back, possibly 70.80 to 70.50. I might be interested there. I have a hard time wanting to get excited about the Aussie with the action that we've had. I called the 71 buy, so that's a nice trade. I'd get flat. And then if the dollar had some juice to the upside, look to buy pullbacks to about the 70.80, 70.50 level in the coming days. Not saying that we can't push up, but this is not a classic looking bottom. It's not a reversal candle like this or like this. So neutral Aussie with what gold's doing. If gold, they smash the gold, then I'll be looking for buying opportunities lower. It's not one of my preferred shorts here in the Aussie. And so here we are in Canada. So Canada, I was looking for a third drive up here, and we never got it. Came close before the crude pop, but this is pretty negative sitting right here on the 50-day. So if crude pulls back, yeah, perhaps we get another shot up towards 140, but I've been saying this is a crowded trade. Yeah, perhaps we get pullbacks towards 136. Maybe the dollar generates another pop, but we're barely holding the 200. So you shouldn't have been long Canada. We already had one divergence. The third drive never manifested. But to me, this is a pretty heavy looking chart. Kind of a rounding top. We've come a long way real fast. Why not a pullback in Canada towards 36? So if you get some rallies in the next couple days in a holiday environment, we should have trouble initially here. And a retest of the highs is about all I would look for, maybe 140.05. But to me, it looks like we've got our top in USD CAD, and we're going to correct this. So this was something I talked about, 140 being an area for the end of the move. There's the high, 140. So I talked about 140. I thought we might get 40.25 for a third drive. It didn't happen. But just because we didn't have a third drive doesn't mean that the correction is not beginning to manifest. And 36 seems to be confluence for me. Let's just take a look at a wave, and I think you'll see that would be a pretty marginal retrace, and that would also be back towards this breakout that we had off this wedge at 36. But let's just take a look at, if crude has 42 in it, I don't think 136 is, I think that's a conservative estimate. Let's take a look at some fibs here. And let's just take it off this low at 128. And you'll see that Canada has quite a ways that it could move for, say, a 50% retracement. Let me try that again. Get rid of this. So if you are a crude bear and you're looking for, 30, 25 crude, this could end up being a nice long-term buying opportunity using the fibs here. Let's try it again. So from this low to the 140 high, halfway back is going to be about 33.60, 134. So that's also a possibility. 134. The 136 level is right around the 38%. Actually comes in right here at 35.70. So that would be the first spot that I think that Canada could pull back to. We could also even have something like this from up here, but I know this is another very crowded trade, just like the short crude is still, even though after this, and just like the euro was at 105. So all you crude bears, I gave you a warning Monday. I hope you heeded it. You wouldn't have been long Canada, and you wouldn't have been short the crude. Give me a Y if you're with me. Taking a look at Kiwi, it's been outperforming Aussie. So Kiwi looking much better than Aussie. I wouldn't reach for it here. I'd be looking for pullbacks in the Kiwi as well. Starting to get some divergence. I'd look to buy pullbacks around 66, 66.20 in Kiwi. And some of the home run balls from the Draghi statement would be things like the Euro CAD. And this is one we talked about at Draghi down here. And actually came off one of my lines right here. We have a little 2 driver. So big breaks in EuroCAD. Maybe back towards 145. I'd be looking to buy pullbacks in here, some type of retrace. If you want to play a counter trend with CAD rolling over, we could have something like this in EuroCAD from here, and that could take us back towards 145. Could be 500 pips to the downside here with Canada rolling over. So this was the last Canada correction. Perhaps we're going to get another one here. May look like a right shoulder. This could be a neckline. Looking for pullbacks in EuroCAD. Said it was played out last week, and pretty much it was played out. Talked about it down here under 141. So this was a big 1100 pip play. Euro Aussie was not as dramatic to the upside, and it's kind of just rolling over into some type of continuation formation. I think there's going to be a place to buy the Euro Aussie too. Off this, we talked about it down here. You could have picked the euro itself or any of the euro crosses and done quite well with our stance of a correction coming in the dollar, and this was a big day. So when it comes to Euro Aussie, bid wise, I think there's more left. So just like I'm talking about a correction in euro, I'm also talking about a correction in the euro crosses, and halfway back is going to come in right around this 145 level. I have some confluence here at 48. And that would only be halfway back. So right around this 48.5 level, I think that this is a low that's going to hold for a while. And I'm not going to be interested in shorting any of the euro crosses until we head up towards 112 euro. Then I'll start considering the short side of the euro crosses, but not till 112, 112.50 euro. Give me a Y if you're with me. Any questions on anything I've covered here today or haven't covered? The theme is that we may have a bounce after a little more weakness in the dollar that could take the dollar back up to challenge the recent highs that we had the day after the Fed. Remember that there are mainly machines trading right now. A lot of the pros are out of the way, so whether or not we wiggle one more time under here, really the line in the sand is 97, and under 97 you have a pretty good projection to the downside between 94, 95, and equality is going to take it down to 96. So my view is lower levels coming in the dollar. The question is, do we do it from here, or is there some type of A, B, C before that happens? I'm in the camp that there's going to be a correction back to the upside in the dollar to give us better buying opportunities against the dollar and the euro. The pound as well, one more low in the pound around that 47.5 level. And hoping the dollar rallies to get some shorts off in US dollar yen back up around 122 if offered. Maybe this is a left shoulder, here's a head, and we get a right shoulder here. And the measured move on this would be pretty good. Probably takes us to the 118, 117.5 level. So that's what I have for everyone today. I wish you a Merry Christmas if you celebrate it. I believe in Russia and Eastern Europe, they celebrate Christmas on a different day than we do here in Europe and the US. I will be back with you next Monday, and we'll see how things are playing out. Just keep in mind that it's really the start of the new year where you're going to get a more conclusive reason for having your biases and taking positions. Trade light because you're really trading against the machines here. And the markets will be here after New Year's. Make sure your equity is. But it's still my view that there's going to be a nice buying opportunity in the euro. And I think even on a pullback that the parity bears will be disappointed one more time until we head up towards 113. And I'm not quite sure that's going to be the end of it either. So good hunting the rest of the week. This is Dale Pinkert. Merry Christmas to the team at RoboForex.com. And I'll talk to everyone on Monday.